ASML reported earnings earlier this week. After earnings, their stock fell over 7%. So what's going on with ASML? There's a lot of fears right now, and it's mainly due to the tariff war that's going on between the US and China, and it's intensifying. There's a lot of companies globally that are being affected by this war, but especially those companies that have a lot of business with China. So ASML has about 20% of its business with China. They are trying to reduce that. Also, they do business with TSMC, which is in Taiwan, which is close to China, and China has showed some aggression towards Taiwan. So there's some fears there as well. So there's a lot of fear surrounding that. Of course, this is a Netherlands-based company, so they're a lot farther from China, so their risk as far as any kind of aggression is a lot lower. So my fears there are not that high. But I will say this is a new stock of mine. I have owned it a few months, so it's very new. And this volatility for me is presenting a buying opportunity because I'm still bullish, and I'm going to tell you why. Now, the other reason why this company dropped is because they provided softer guidance for the second quarter, which will be the next quarter that they report earnings on, as well as their bookings came in lower than what was expected. So as I said, first quarter is what they reported on, and they beat analyst estimates. So this was actually overall a really good earnings that they provided, but people are just focused on that Q2 guidance being softer. But I think that's kind of wrong to do that because right now the headlines are saying softer guidance, but people aren't looking into it. They're not realizing that this is just for the second quarter and it's due to tariffs. ASML can't control that, right? There's nothing fundamentally going on with ASML that's of concern. This is a global thing that's going on. But if you took a step back and looked, there's actually some good guidance after second quarter that we're going to talk about. So this company earned the equivalent of $6.80 a share on sales of $8.77 billion in this March quarter. Analysts estimated ASML to earn $6.16 a share on sales of $8.32 billion. And in the year earlier, the period last year of March of 2024, ASML earned $3.31 a share on sales of $5.63 billion. So there you'll see the strength in growth of their sales. They're doing just fine in that area. Now, the CEO came out and said a few things that I think are important. He said the first quarter total net sales came in, and this is in euros, at 7.7 billion, which is in line with our guidance. That is great. That means this company has some good precision on estimating their guidance. So that means when we listen to some things that he says here in a minute, I think that's something that's very important that we can have some trust in. Now, the gross margin was 54%, which was above guidance. There's another good thing that happened that I think people are ignoring. This is an excellent gross margin. It makes me happy as a shareholder to own this company. Now, this high gross margin was driven by a favorable EUV product mix and the achievement of performance milestones. In the first quarter, we shipped our 5th high NA system, and we now have these systems at 3 customers. Now let's talk about this system quickly. It's the EXE system, or as he mentioned, the other name is high NA, and these systems are the latest generation of EUV lithography. Now, they have a numerical NA of 0.55. Their innovative new optics provide higher contrast and print with a resolution of just 8 nanometers. The EXE platform will support high-volume chip manufacturing in 2025 and 2026, enabling geometric chip scaling into the next decade. That will include future advanced nodes starting at the 2 nanometers logic node and followed by memory nodes at a similar density. So by reducing the number of process steps in high volume manufacturing, chip makers will benefit from significant reductions in defects, costs, and cycle time. Basically, they're widening their moat here by selling these new systems that should be, very desirable in these next coming years, and then support for the decade after. So this is excellent to see that they're starting to sell these, and they're very bullish on the 2025 and 2026 years of these machines being sold. And this brings me to what else the CEO said. He says, our conversations so far with customers support our expectation that 2025 and 2026 will be growth years. Let me pause there and repeat it again. Our expectation is that 2025 and 2026 will be growth years. Should be music to your ears if you're hearing that. People are focusing on the second quarter soft guidance, 1 quarter of soft guidance, but that didn't change their outlook on the full years of 2025 and 2026. They still expect them to be excellent growth years. That's what I'm focusing on. He did say, however, the recent tariff announcements have increased uncertainty in the macro environment and the situation will remain dynamic for a while. You're going to hear that from a lot of other companies, not just ASML. And it is going to bring some uncertainty, right? Because we just don't know how long this is going to go between the US and China and just how intense it will get. But he did say, as previously shared, artificial intelligence continues to be the primary growth driver in our industry. And I believe this is where they shine. This is where they have the wide moat because they're the only company currently that has this technology. All others are pretty far behind. It will take a while for a China to catch up, let's say. That's a big fear as well, but I think they're still very far behind. They've shown that they've started with lithography technology, but it still is nowhere near what ASML does. Now, it has created a shift in the market dynamics that benefit some customers more than others, contributing to both upside potential and downside risks as reflected in our 2025 revenue range. That's just saying that these tariffs are going to create some benefits for some companies, but it's going to hurt some companies, and we just don't know what customers are going to be affected and how. But they do still have those conversations with their customers, and their customers are saying that they're still wanting to invest in their machines. He did say we expect second quarter total net sales between $7.2 billion and $7.7 billion, with a gross margin between 50 and 53%. Very strong gross margin. He says we expect R&D costs of around $1.2 billion. He says, as we previously communicated, we expect total net sales for the year between $30 billion and $35 billion, with a gross margin between 51% and 53%. So you have second quarter between 50 and 53, and their full year of 51 to 53. So really the soft guidance, that is just dropping the low end from 51 to 50% as far as their gross margins go. And then he said that it's subject to uncertainties mentioned earlier. Of course, the tariffs are creating uncertainties, so yes, that is a risk. Now I will say, again, focusing on the second quarter soft guidance, ASML predicted, as I showed you the range, but the midpoint of that range is $7.45 billion. Analysts were modeling in $8.36 billion. So they're almost about $1 billion short. And yes, that is a decent difference. But when they're talking about 2025 and 2026 staying on track, that means there's probably going to be a dip in their sales, and it should recover nicely. If there's a dip, right? We just don't know. The tariffs are a moving target right now. And then he said the direct and indirect effects of global tariffs are still being assessed by ASML at this time. The 2025 outlook remains unchanged. Those are just wonderful words to hear. He says the company also expects 2026 to still be a growth year. So I see it as this is an opportunity to take this fear where people are just focusing on one small quarter, the second quarter. You have this wide moat company with this technology that no one else has. And when you're first to market and you have built out your customer base, that's pretty hard to disrupt as well, even if there is a newcomer into ASML's lane. But not only that, ASML still predicts 2025 and 2026 to be growth years. So I say, and what I'm doing is I'm buying now because I feel in 2 years, I'm going to be very happy that I didn't listen to this noise of the tariffs, of the soft guidance for this second quarter, of the bookings that didn't quite meet expectations. So let's look at some of those numbers, by the way. I circled a year ago compared to just this year with earnings. So March 2025 versus March 2024. And I just want to point something out. Yes, the net bookings came in lower than expectations, but they're still higher from a year ago. The same thing with the sale of their units. They're still up. And then all the different ratios grew from a year ago. So there's, for me, growth from last year. There's expected growth years, which means fast growth in 2025 and 2026. To me, that's just lining the stock up for an opportunity while others are fearful. I think it's time for us to be greedy. As well as they increased their dividend 4.9% between the years of 2023 and 2024. I think they'll continue to increase that dividend going forward. So I'm still buying. I did buy some probably 3 shares over the last 2 weeks, and I plan on buying more. And I just am not going to be fearful right now. There's nothing to be fearful. I don't see any red flags. If the tariffs get to the point where they're affecting ASML to in a material way, shall we say, then it's probably going to be affecting many of your other companies as well. And it's not just an ASML problem at that point. So we are also seeing something else that I think I want to put a warning out on. You're starting to see a lot of analysts lower their price targets. So they did it with ASML. They lowered it from one analyst from 860 to 840, another from 1100 to 965. It kind of shows you the range with analysts and what they think of ASML. But you have it with other companies. Microsoft, it got lowered from 497 to 480. S&P Global, there was 3 different analysts that lowered it. So it went from 633 to 607 for one analyst. It went from 590 to 542 from another, and 618 to 565. Even my smaller company, Health Equity, that I own, went from 110 down to 100. So let me say this. I don't really share analyst estimates very often, and I never go off of them when considering to buy a stock. And I'll tell you why. I did a lot of research over the last couple days before I made this video, and what I found was that on average, analysts are only correct with their price predictions 30% of the time. So think about that. Out of 10 price targets you look at, only 3 will be correct. And there's even research that had a worse percentage of analysts being correct than that 30%, but I was just taking about an average of what I saw out there. So do not go off of analysts' price predictions. It's like trying to predict the weather a year from now. These analysts are trying to predict the price of a stock a year from now. It's just almost impossible. The odds are against you if you're going to go off of price targets, so don't do that. Instead, go off of the fundamentals of a company. My last 2 videos will be great for you to watch. I went over different metrics and ratios on how to value a company to see if it's a good buy or not. These are the things you should do. So that is kind of my warning to don't focus on those. They're fun to look at. I like to look at them, but don't use them as a tool to buy your stocks. So in summary, ASML, I think, is a buy. They still had a great earnings for Q1. They're still predicting growth years of 2025 and 2026. And I don't think the tariffs are going to have a huge impact on ASML like they are some of the other similar companies in the sector. So before I go, I share this with every single video. It's my portfolio, and here's its performance. I'm up 12.5%. Highlight ASML, I'm down 4% in this company. Again, I've held it for a few months, and I am adding. While it's in the red, I want to be able to average down, so when it does go back up, I can look back and say, hey, I fulfilled my position, and I'm very happy with the gains now. And I think in 2 years, this will be in the green by at least 25% or more. That's at the very least. Now, Google is also one that I'm adding to. It's down 6.57%. Really, all of these have gone down. Vichi's kind of seen a rebound. I think the REITs, people are having a little bit more comfort with REITs right now with the dividends that they pay out. But overall, I think I'm doing pretty well. And when, there's fear out there, I'm just going to be buying. So for me, I'm not fearful of ASML. I think it's a strong opportunity now to buy. Let me know what you think, though. Do you think I'm wrong? Do you think ASML has some big problems ahead and you're just not willing to invest in them? Let me know what and why. And also, what do you think of these tariffs? Do you think they'll end soon, or do you think China and the US are just too, they're too strong of personalities? One's not going to want to, claim defeat. So it's going to be interesting, but I think, again, it's just adding to the opportunity we get to buy right now. So that's all for today. We'll see you next time on Mark Arnold's Finance.